Apple reported their second quarter of 2024 on May 2nd. The market was happy, but maybe it was counting its chickens before they were hatched. A record share buyback of $110 billion, the promise of their iPad launch dubbed Let Loose, and the hype around the Worldwide Developers Conference on June 10th cloud the challenges Apple is facing. We'll examine the latest earnings report, look at their segment revenue and growth, explore some valuations, delve into their limited guidance, and cap it off with our rating. Our Q1 2024 report, How We Reached Peak Apple, is linked below. Apple's revenues were 90.8 billion, down 24% quarter over quarter and 4% year over year. The gross margins, however, were better to 46.6%, improved by 1.5% quarter over quarter and 5% year over year. Operating profit was 27.9 billion, down 31% quarter over quarter and 1.5% year over year. That equates to a 31% operating margin. Apple's bottom line was 23.6 billion, down 30% quarter over quarter and 2% year over year. Quarterly sales were down so much due to the Christmas quarter reported in Q1. We should also note that the extra day for leap year added about 1 billion in revenue to Apple this quarter. Turning to the quarterly breakdown of the income statement, we can see net revenue has been contracting by negative 0.8% over the last 9 quarters. Gross profit has been flat. Operating profit and net income have both been down 80 to 60 basis points, respectively. Let's look at the revenue by segment. We can see that iPhone in blue is the dominant product, reporting $46 billion in the quarter, contracting 1% since Q2 2022. iPhone made up 52% of total revenue in Q2 2022, down to 50.6% in this quarter. Services in orange was the only bright spot, growing 2% to finish the quarter at 23.9 billion. Services were 20.4% of revenue in Q2 2022 to 26.3% in Q2 2024. Next is wearables, home and accessories in green, finishing the quarter at 7.9 billion, down 1.2%. Mac computers in red reported 7.5 billion, down 3.7%, and iPad, shown in yellow as their smallest business segment, reported $5.6 billion, down 3.5% from Q2 2022. Turning to revenue by geography, Americas in blue is the largest, reporting 37.3 billion this quarter and is lower by 1% on a compound quarterly basis. Next was Europe in red, Apple's second largest market. A bright spot, this zone actually grew by 0.4% to 24.1 billion. Greater China in yellow came in at 16.4 billion. Over the weekend, all the pundits were worried about competitors and loss of market share in China, but they make up only 18% of total revenue. Quarter over quarter was down 20%, but was down 25% in Q2 2023 after that Christmas quarter, and the shares were up $8 when they reported those earnings. Apple has plenty of upside if it can compete against the local favorites. Though revenue has been softer by 1.3% since Q2 2022, Asia Pacific in orange reported 6.7 billion, and it's down 0.5% since Q2 2022. And finally, Japan in green, their smallest market, reported 6.3 billion, it is down 2.3% in the last 9 quarters. Now let's look at some valuations. Shares outstanding were down 112 million on a fully diluted basis. That gives us an earnings per share of $1.53. Sales per share of $5.90, both lower quarter on quarter and year on year. Cash per share was $2.11. Book value increased as well to $4.80. Apple has a PE of 29.8, and that is based on the earnings per share of $1.53 annualized, to compare to the S&P 500, which has a PE of 27.3. Given how much growth has slowed, this PE probably isn't justified, and that is supported in the PEG ratio at 121. The leverage ratio showed debt at 0.27 and debt to equity at 1.24. The latest earnings showed a net interest income, so we couldn't find out how much they're paying out as interest. Liquidity ratios look good. Current ratio 1.04, quick ratio 0.72, and cash at 0.26. Turning to the return on ratios, return on assets 28%, return on equity 127.4%. That gives us an equity multiplier of 4.6. Return on capital employed 13%, and return on invested capital 11.2%. As always, Apple has great cash flow numbers. Operating cash flow was 62.6 billion. Investing inflows were 1.6 billion. Financing outflows were 61 billion, largely due to the share buybacks in the quarter, and free cash flow to the firm stood at 34 billion. Apple's dividend is 24 cents, yielding a 0.5%, growing at 4.4% with a payout ratio of 15.7%. They announced that they will increase their dividend to 25 cents a share. They also announced a share buyback of 120 billion, the largest on record for any company. Apple's enterprise value is $2.8 trillion. That's 7.7 times revenue annualized, 16.6 times EBITDA, and 82.6 times free cash flow. Turning to the guidance, not much was provided in the press release, but we did find an article on CNBC that Tim Cook expects revenue to be in the low single digits for Q3. We can see it here in gray. At 1% growth, that would give us 91.7 billion. Not much else to be said on guidance. The key takeaways, we like that the gross margins are up and improving at 46.6%, the most in several quarters. The service business continues to grow and be a larger part of Apple's total revenue. The free cash flow, enough said about that. And of course, the share buybacks will help the earnings per share and share price. On the pawn side, it's clear that iPhone is saturated. Whoever has one is going to have one. Apple has some legal issues. The U.S. Department of Justice is suing Apple for monopolistic practices. Europe fined Apple 1.8 billion euros for anti-competitive practices. Apple faces strong headwinds indeed. That being said, we're giving Apple a neutral rating. We have no exposure to this company. Like and subscribe.